Welcome to AM Best Audio.
John Barrett is the Chairman, President, and Chief Executive Officer of Western and Southern Financial Group. The Cincinnati, Ohio native has served as CEO since 1994 and as President since 1989. Under his leadership, Western and Southern has grown from a small Midwestern life insurance company founded in 1888 into a national financial services enterprise and has doubled in size every 5 years for the past 15 years. I'm John Weber for AM Best TV, and my guest today is the aforementioned John Barrett. John, so glad you could join us today.
I'm honored to be here, John. Thank you.
So, John, why don't we start? How did you end up at Western and Southern?
Well, I was at the bank. I graduated from University of Cincinnati. I went to New York with the idea of going there for 2 years, and I stayed 16. My idea was to go up, get an education, and then go on into formal education at a good business school. But when I was at the Bank of New York the whole time. When I got there, the culture, the people, the leadership, the business opportunity, the education was unbeatable, especially for me. So I felt like I had 100 mentors. I felt like I had 1,000 friends, and I just took to it. So I moved through the ranks of the Bank of New York. I was in charge of the half of the United States corporate lending 10 years after I got there. And it was great. I had a lot of people working for me and with me, and they taught me a ton. A business opportunity came up, and I went to see the CEO to tell him about it. And he said, stick with me and I'll make it interesting. And I said, the guy's name was Carter Baker. He was a wonderful guy. I said, Carter, I never want to be in a position that I can't move higher because I'm lacking some basic skill or whatever. He said, okay, stick with me. I'll make it interesting. A year later, he calls me and he said, we're going to go into the credit card business and we're going to do it in Delaware. And I'd like you to go down and do it. And while you're at it, you're a good corporate lender. You can take 6 or 7 states of the business we have with you. So you have both. So I went down to Delaware, and we started in December of 1983. And when I left in May of 87, we had gone from 131 million to over 5 billion in assets. And it was the most profitable unit within the Bank of New York. It was great. What a wonderful experience.
Wow. Now, you've been at Western and Southern, you told me 37 years. That's about half your life.
That's right.
When you started, that was the dawn of the fax machine, and that seemed like a miracle at the time, right? And here we are now at the dawn of artificial intelligence. You've seen a whole lot. What have been some of the biggest changes in business that you've seen over the years, John?
Well, lots of changes. People's values have changed. The life insurance business has tremendously changed, and it's really more life and retirement. And the tenets of it are based on good, solid, quality investing, really good actuarial work so you're not making mistakes on the products you offer, and then great customer service. To do all of those, you have to have a great corporate culture. And so the first thing I wanted to do, I was at Western Southern for 2.5 years as a CFO, so I got to go around and see everything we were doing. And back then we were a home service company. And I could see that home service was not a growth business. As a matter of fact, we're 11 businesses now. And as far as our 6 income producing insurance related entities, it's now the smallest. But never de-emphasized it, just went with faster growth areas. First, we did distribution through banks. Then we bought some more life companies. Then we started a mutual fund. We bought an annuity company or 2. Then we just migrated our way up the food chain until we brought these companies in. We had built a world-class back office. So we typically ran the back office from home, but we didn't disturb the distribution units. They still had presidents. They still had people, employees, and whatnot. But we were able to really economize on the back office costs and offer each other's products. And that's worked beautifully.
At the heart of it, though, life insurance really still is a relationship business after all these years, right?
Oh, absolutely. And in life insurance, it's got to be a relationship business. You can sell lots of things, but if you want to keep them, If you want to keep them, you better have relationships.
Customize your data experience. BestLink now offers an interactive company dashboard that provides company-level intelligence in a fast, user-friendly interface featuring interactive tables, charts, and Sparkline performance histories. Customize the dashboard tiles to prioritize the insurer ratings, data, and analytics that best support your workflow. AM Best. Our insight, your advantage.
Now, you've presided over some extraordinary growth, and you did it through two major events. We had the financial crisis of 2008, and most recently, the pandemic. How were you able to do that, especially through the financial crisis of 2008? Because the pandemic, a lot of life insurance companies saw growth during that period of time, right?
The financial crisis of 2008 was a barn burner. And we got caught like everybody else with investments that went deeply underwater quickly. But we being different, we're different from the average bear. We run the highest capitalized balance sheet that I know of. So when the pandemic hit, we got hit too. We took $550 million of hits, of write-downs. That hurt badly. However, we're different from most guys. We looked at that and we said, now how in the world did we approve, because we approve all of our investments once a week at a committee and talk about them. These were AA and AAA rated securities. How did this happen? And mortgages never go down below a certain amount. This time they did. Well, anyway, so we took a good look at that. We said, well, if these were good investments in September of 08, maybe there'll be good investments again in September of 10. And so we didn't panic. We held on to them. The investments did come back. But in that period of time, we also went to the guys who sold them to us and checked the reps and warranties, and we ended up settling with each of them for a nice, tidy sum. So we not only got all of our money back because of the eventual return of the value to the bonds, but we were also paid for our pain and suffering.
Did that impact how you do business long term?
No. And we made that judgment. Other people said if you sue certain people, they'll never do business with you again. We do business now more with all of them than we ever did, and we're all still great friends. It was business.
Interesting.
Yeah.
John, how would you describe your management style?
Hands-on.
Hands-on.
There was a time when I had 22, 23 direct reports. I'm now down to about probably legitimately 6, but people might say it drifts to 8 or 9 because I'm still involved with the businesses. But the way we run our business, we have no silos. You do have corporate structures that are different. You do have CEOs of various units. But with a pretty much of a centralized back office and a centralized computer operation, it makes sense for everybody to be in touch all the time. Every Monday, we have about an hour and a half to 2 hour lunch, the top 22 people in the company, every Monday. Every Wednesday, 7 or 8 top executives who are involved with the investments meet for an hour and a half or 2. And then in between there, we have other committees that meet at least every month that involve with risk management, all of our all of our intelligence operations. These different committees meet. I go to all of them, and so do a lot of people. And what happens is we all know what's going on. So if something happens, it's next man up. Somebody else can step up and do it.
Do you ever worry that a hands-on style can be confused with micromanagement, though?
I don't. There's too much. If you wanted to micromanage, you go nuts. But also, if you inspect what you expect, you get much better results. And if your people and their people and their people and their people know people are looking, everybody does a better job.
Now, I have this belief, John, that people are afraid to come to the boss and give them bad news, or taking it a step further, telling the boss they're wrong. And I'll be the first one. I'm guilty of that myself. And I have some great bosses here at AM Best. But no one wants to deliver bad news to the boss, or even taking it a step further, telling them they're wrong. How do you foster an environment where it's okay to do that?
I guess you just do. I'm very approachable. I really enjoy the people I work with. I mean, it's like family. You just really get to like each other. And we also have sort of an unspoken rule, no secrets. Everything come out on the table. We don't like people to leave meetings and 2 weeks later say, well, he should have said this. Speak up or forever hold your peace.
And they're not afraid to come to you and say, John, you don't know what you're talking about on this.
I hope not. I hope not. But they do disagree with you from
Sure.
time to time.
Well, that's a good thing, right?
Yeah, it is.
So where do you see the life industry headed, John?
Consolidation driven by expense savings, driven by the need to earn certain returns, and also driven by inefficiencies. Many companies are terribly inefficient. They will get better. They will. And not all of it will be fun. But for the people who have a good culture, it can be fun. You got to have a good culture. Not every company does. You think about this. In the Fortune 500, the average CEO has his or her job for less than 4 years. That's not a long time to set a strategy. That's not a long time to see a strategy through. And when you think like that, do you invest in the long term, or are you thinking about those bonuses? Our deal is different. We have 8 or 9 people in AM Best today, and the least tenured person is probably 20 years.
That's great.
Yeah.
Now, I've been pretty easy on you to this point, don't you think, John?
Very.
I'm going to get tough now.
Good.
You're a University of Cincinnati guy.
I am.
The Bearcats are playing the University of Iowa this week. They're an 8.5-point underdog. Is there a snowball's chance in hell that they can beat?
The Bearcats have a tremendous quarterback. He's a pro prospect for sure. With him healthy, yes.
I'm going to hold you to that. And if they don't, I'm going to
Call
make
me.
you come back here and do another one of these,
There
okay?
you go. Yeah.
John Barrett, what a pleasure it is to speak with you today.
It's been fun. Thank you.
Thank you. That was John Barrett, President and CEO of Western and Southern Financial Group. And I'm John Weber for AM Best TV. Looking to get the full attention of the insurance industry? We have the platforms that will do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day. Find out more by calling AM Best Advertising Sales at 908-439-2200, extension 5399, and have a great day.